Wall Street analysts predict XRP to exceed 50 up from the already staggering 25.37 previous prediction. And this shocking revision has sent shockwaves through the global financial community, because when the most powerful analysts in the world, backed by institutional capital, begin raising their long-term forecasts for a digital asset once dismissed as speculative, it signals not only confidence, but a structural shift in the way global finance views XRP. For years, Ripple has positioned XRP as a neutral bridge currency, a settlement mechanism for global cross-border transactions, but the narrative is evolving rapidly. Now, Wall Street is modeling XRP not only as a payment facilitator, but as the potential backbone for tokenized asset flows, real-time foreign exchange, derivatives, and sovereign debt settlement, meaning we are talking about trillions upon trillions of dollars in value that will be directly tied to the utility and liquidity of XRP. The original 25.37 target was already unprecedented, calculated based on liquidity requirements to support cross-border settlements and tokenized financial flows, but the new 50 target reflects fresh models that incorporate the explosion of tokenization markets, the integration of institutional adoption programs, and the staggering liquidity injection expected once real estate, equities, bonds, and commodities begin to move across the XRP ledger at scale. Analysts point to the Institutional Asset Program, global central bank pilot programs, and Ripple's deep ties with financial behemoths as catalysts that could push XRP into unprecedented territory, and what was once dismissed as science fiction is now being openly discussed in closed-door financial strategy meetings as a credible outcome of the ongoing convergence between blockchain and legacy finance. These analysts note that the XRP ledger is unlike any other blockchain in existence. It has proven resilience, transaction finality, ultra-low fees, scalability, and most importantly, it is regulatory friendly compared to competitors that struggle with compliance hurdles. This makes XRP uniquely positioned to capture not only cross-border flows but the entire tokenization revolution, which is projected to be worth hundreds of trillions of dollars by 2030. And when that kind of capital begins moving through a network with a capped supply of 100 billion tokens, many of which are locked or held by long-term investors, the price must mathematically recalibrate to absorb this demand. The jump from 25.37 to 50 reflects analysts' growing belief that Ripple's role in global finance is not simply as an option, but as an inevitability, with some comparing the moment to the early days of the internet, when companies like Amazon or Google were underestimated until their infrastructure became indispensable to the world. At 50 per token, XRP would represent the true monetization of global liquidity itself, a settlement layer capable of handling anything from microtransactions to trillion-dollar interbank settlements, all secured and verified by the XRPL. The skeptics who once scoffed at three-digit price predictions for XRP are now being drowned out by analysts who understand liquidity, math, supply scarcity, and institutional adoption models that fundamentally transform price expectations. And when Wall Street starts to raise targets, it's not about hype, it's about preparing clients for a reality that is approaching faster than the public realizes. Ripple's ongoing partnerships with central banks, its progress with regulatory clarity, and its positioning in tokenized asset markets are aligning perfectly with this forecast. And while retail investors are still arguing over whether XRP can break past 10 or 20, institutions are quietly modeling five-figure valuations that reflect the scale of liquidity XRPL is about to support. What this means is simple. The market has dramatically underestimated XRP, and those who fail to grasp the magnitude of these shifts may miss one of the most transformative opportunities in financial history. Analysts now frame XRP as digital gold on steroids, not because it competes with gold, but because it transcends it, offering not only a store of value but active utility as the lifeblood of a new financial system. And when you combine the store of value premium with the utility premium, you get explosive price multiples that justify the 50 forecast. This is not just about Ripple winning a case with the SEC or securing a few corridors. It is about the wholesale replacement of legacy infrastructure, the re-platforming of global finance onto blockchain rails, and the creation of a single interoperable liquidity layer for the entire world. At 10.50 per coin, XRP would no longer be a cryptocurrency. As the market defines it today, it would be a monetary instrument underpinning the backbone of international trade, capital markets, and central bank liquidity. So, when Wall Street analysts raise their predictions, they are signaling to their institutional clients that this shift is not just possible but inevitable, and that positions need to be taken before the floodgates of global liquidity fully open. The 2537 call was the warning shot, but the 50-0 revision is the confirmation, and if you understand where global finance is heading, you understand that XRP is no longer optional, it is the infrastructure of tomorrow, and its value will reflect nothing less than the digitization of everything. For decades, SWIFT has stood as the unchallenged backbone of global finance, the trusted messaging system that connects more than 11,000 financial institutions worldwide and enables trillions of dollars in cross-border flows every single day. But as technology accelerates and demands for faster, cheaper, and more transparent payments rise, SWIFT has faced mounting pressure to evolve or risk becoming obsolete. And now, in a move that is sending shockwaves across the financial world, reports confirm that SWIFT has begun testing Ripple's XRP ledger as it prepares to fully migrate to the ISO 20022 standard in 2025, a standard that will unify payment messaging worldwide and usher in the next era of interoperability and efficiency across borders. And the fact that Ripple's blockchain is not only ISO 20022 compliant but is actively being tested by SWIFT itself represents nothing short of a seismic shift in the global financial landscape. Think about the significance. The very institution that Ripple was once seen as competing against, the very backbone of legacy finance, is now exploring Ripple's technology to ensure that it can adapt to a future where instant settlement and distributed ledger technology are no longer optional but necessary, and by testing XRP Ledger alongside its move to ISO 20022, SWIFT is effectively signaling to the world that blockchain integration into global payments is not theoretical, it is inevitable. The XRP Ledger, with its proven track record of speed, scalability, and low-cost settlement, is perfectly aligned with the demands of a global system that can no longer tolerate multi-day settlement times, high fees, and opaque intermediaries. And SWIFT knows this, because as it readies its migration to ISO 20022 in 2025, it cannot afford to ignore the blockchain networks that are already compliant, already functional, and already years ahead of legacy rails in terms of performance. Ripple has built its reputation by quietly partnering with banks, regulators, and payment providers across the globe. And the fact that SWIFT is now testing Ripple's core technology is validation at the highest possible level that Ripple has built something not only competitive, but indispensable. And if these tests prove successful, the implications are profound. We are talking about a future in which Ripple's XRP ledger could underpin or integrate directly with the world's most critical payment infrastructure, effectively becoming the backbone of the backbone, the settlement layer beneath the global messaging system that powers trillions of dollars in flows every day. Imagine the demand shock this could create for XRP as a bridge currency, because once institutions realize that XRP can eliminate the need for pre-funded accounts, reduce liquidity costs, and enable true instant settlement, the choice becomes obvious. And when SWIFT itself is experimenting with XRP Ledger, the legitimacy question is no longer up for debate. This is adoption at the highest institutional level. Analysts have long speculated that ISO 20022 would act as the great filter, the moment when only the most compliant, most functional digital assets would be positioned to survive and thrive. And XRP has always been at the forefront of that conversation, with Ripple ensuring its ledger was ISO 20022 ready years before the standard became mandatory. And now, as SWIFT marches toward its full-scale ISO transition, it appears that all roads are converging on Ripple's technology as the logical solution for settlement. The year 2025 will be remembered as a turning point, because by then the global financial system will be operating under a unified standard. And if Ripple's technology is embedded within SWIFT's framework, XRP will no longer be seen as a speculative digital asset but as the underlying fuel of global payments, a reserve-level settlement mechanism trusted by banks, corporates, and governments alike. Already, whispers in the financial corridors suggest that SWIFT's interest in Ripple is not limited to technical tests but is being driven by client demand, because banks around the world are tired of inefficiency, tired of legacy delays, and are actively pressuring Swift to provide solutions that match the needs of the modern world, and Ripple's blockchain is exactly that solution.